I guess before I get into this presentation, which hopefully some of you have seen before, so it's not going to be entirely new stuff, but this is really focused on institutional investment. So it's really raising kind of above millions of euros. So I think a lot of the things that probably some of the other speakers have addressed earlier today with respect to angel sort of funding or kind of smaller amounts, then maybe some of the comments that they made are probably going to be more relevant depending on the size of funding that you're looking to raise. So just a little bit about Agnitio. I mean, we were founded in 2003 here in London. We're focused on the gaming sector, have been for a number of years. We are both an advisor. That's our principal business. So when I say an advisor, that means we assist studios in raising Series A financing, that's in millions of euros, or exiting. Some of the recent deals we included were a Series A investment for Social Spiel by Nexon, a seed round of funding for Ocean View Games in Finland by Gameville, and then we also sold Future Games of London, which was a leading studio here. Many of you have probably played the title Hungry Shark Evolution. We sold that studio to Ubisoft. Some of our personal investments include Social Spiel in Vienna, Hutch Games here in London, Fragment Productions in Finland, and Gungeon Games, which is a relatively new studio in Brighton. So I'm going to probably just talk to a couple of bigger slides on the market. And I'll try to be fast because this is kind of pretty redundant, but everybody knows the market is huge and growing. But this is actually a much more pertinent slide, and it's probably, unfortunately, a little bit small for many of you to see. But I think what is important about this analysis is that in the yellow bars, there's only 2 paid games in the top 100 grossing games category in the US. So what that means, and a lot of folks, if you're indies out there and you want to raise institutional financing, you need to be focused on free-to-play. The majority of these titles have been around also for a long time, and there's not really a lot of movement, particularly as you get higher up in these grossing positions, so kind of top 50 and above. Why choose the US? Well, it's the largest market in the West. It's a very diverse one. It's composed of various different ethnicities and nationalities. So it's actually a very good representation of global taste to some extent. Some of the other studios that I thought would be notable to mention, 9%, so 9 titles in that top 100 were developed by studios based in Finland, most of them largely King, and a few by Minecraft. And then obviously Finland fares pretty highly as well. Mainly due to Supercell and Rovio, and actually there's one title from Next Games. And then Japan as well, it's mostly composed of Dina and a few other large players. What is actually a lot more interesting, and again I go back to the point I just made, is that King and EA have 7 titles each in that top 100 grossing list. Then you have Playtika and Zynga with 4 titles each. And then you have a smaller, well, actually not a small, but actually a decent handful of studios that have 3 and 2 titles. So you can see the sort of prevailing dominance of larger players in the top 100 grossing. Another worrying trend is CPI costs continue to go up. Why? Because the graph that I just showed before indicates that larger players are just going to keep outspending anyone they can. It's a market, it's a land grab right now. It's a market share, sort of land grab. So the quicker that they can derive more revenue, even at a loss, they're going to do that. And it's mainly just to crowd out smaller players. It's evident that the industry is maturing. So I'm just going to summarize really quick. More revenue attributed to larger players, CPI costs continuing to increase. That is going to prompt consolidation. And you're going to start to see it even from, I think, really large levels, from transactions like most recently Activision and King. And then you're also going to probably see it on the really low level as well. But it's in that mid-tier level that I think actually where people really need to decide either they're going to sell, and when I say mid-tier, I'm talking about studios that are making 20, 30 million of revenue, or are they going to decide to sell to larger strategics, or actually become an acquirer themselves and buy smaller studios. But more importantly then, how does this impact smaller studios' abilities to raise funding? So this is a table of sort of the most recent European games fundraisings, pretty much calendar year 2015. So if you look at this list, Finland again leads the pack with 8 fundraisings, however closely followed by the UK at 7, and then the next country is Germany with 3. If you look at Finland, I think that most of them are really going to be mobile gaming studios that have raised money. A lot of those people coming from companies such as Rovio. The UK is kind of a mix of some studios, even one PC studio that's Edge Case. I think it's the only PC deal that occurred last year of note. When I say that, I'm referring to Series A kind of threshold. And then in Germany, you have a lot more, I would say, analytics, tracking software, platform, UA type companies. So yeah, Finland continues to remain attractive, mainly because you have tremendous talent from the likes of Supercell and Rovio. So those are obviously seeding lots of independent studios that are able to then go on and raise Series A financing, not just from VCs, but also from strategic investors. UK has tremendous talent as well, particularly from the AAA console side. But again, it's still sort of transitioning to mobile free-to-play, and I think that this particular country will continue to get stronger in the years to come. Germany has some really significant analytics, platform UA expertise. I'm sure some of you know the companies such as Uplift and Adjust that are clear leaders in their respective markets that have raised, north of 10 million euros each. Most of the companies, again, that were focused on fundraising and in some part of the value chain of either developing, launching, marketing games. And most of the deal sizes were around $4 million or less, although there are a few deals that actually very large deals. In fact, CCP recently raised a $30 million round. Probably more pertinent is who's investing. Well, you do have Nordic-focused VCs such as Creandum, Northzone, and Sunstone. They continue to invest very actively in Finland and to some extent in Sweden. Here in the UK, you have funds such as Initial and Mercia that primarily invest in UK studios. However, the majority of European VCs do not invest in European games companies. And there's a variety of reasons why they don't, but that's a whole other conversation and not really relevant for this discussion. But bottom line is there's only really a handful of VCs who invest, and that's why you're starting to see in this slide in the red, strategics filling that void, filling that gap that continues to prevail despite the level of talent and success that has clearly blossomed here in Europe. Which actually answers the next point. So yeah, you're starting to see a lot more strategic investment from the likes of Nexon, NetEase, Gameville, Scopely, CSUN, and I think they're going to continue to be very active, and a number of them are here even at this conference and will be also at MGF. There are a few US investors as well who've been active, particularly in companies such as Seriously, Upfront Ventures. They've invested, I think, in a number of rounds, as well as IDG Ventures. So what are these funds, whether they're VC or strategic investors, really looking for? And I think Shelley, in the previous conversation, certainly alluded to some of these key attributes. And again, I'm saying this from the perspective of institutional investment. So if you're looking to raise a Series A from a real legitimate VC, I'm talking millions of euros rather than a couple hundred, these are going to be more pertinent to you. So the first thing, and I think it's really goes without saying, everybody's going to tell you, try to assemble as great of a team as humanly possible. I mentioned in a number of the previous slides how competitive of a market it is out there. So you really need to try to strive to assemble really industry-leading talent as quickly as possible. Actually, let's dive into this here. And when I say that, it should be in all functions of your team. So it should be a great executive producer, studio head, should be an awesome tech lead, awesome artists, and ideally, and I think Shelley also alluded to this in her talk, is a commercial director. I can't tell you enough games companies that I meet that have tremendous talent and actually even can check off all the various functions of having world-leading talent, but the one area that they continue to suffer in finding or filling that role is really commercial director. And when I say commercial director, I'm talking about somebody who understands your finances, somebody who understands and can market your business to investors and be that commercial liaison, and to speak their language. I think it's also really, really important that you do that. It doesn't necessarily have to be at the time of funding, but I would say it'd probably be your number one hire if you successfully manage to raise a Series A. Ideally, that team, if possible, should have shipped mobile free-to-play products previously. So having experience in mobile free-to-play, I think, was a nice to have. I would almost consider it more of a must-have now. And ideally, a top 200-300 grossing title that would even just make your ability to even start getting into more serious conversations that much more effective. Track record. So again, sort of my last point leads into that is having that previous experience of hopefully having launched successful titles at a previous studio. It doesn't matter. And that you can really demonstrate that you're going to take those learnings and incorporate them into your current business and current title and hope to achieve even better KPIs. And then, of course, having a commercial focus and really sort of understanding what it takes to make a great game. I think a lot of game developers can do that successfully. I think that ensuring that it generates a significant amount of revenue that is going to be attractive for investors is where there's probably some more ambition that needs to be employed. Understanding UA and monetization, again, it's absolutely crucial now. I mean, you can certainly partner up with firms, but I think it's really, really, really important to have somebody internally who can manage that. And again, there's that person can also obviously be tied to working with Apple and Google and try to get featuring on those platforms, marketing using social media to drive organic and viral installs, having a clear focus in terms of your demographic audience and what's going to work with them, and ensuring that you maintain good ratings of your games, and really then supporting further development and figuring out the optimal time on when you're going to release features and updates by working in conjunction with your business intelligence team and having that immediate feedback loop into your game development. And again, I think that last point is really important, is investors, and this is one reason why I think a lot of investors have shied away from gaming, is they support businessmen and not necessarily gamers. Networking skills, I mean, look, a lot of investors do not know you. They are going to be in the business of saying no rather than yes. So you have to find entry points into them. Ideally, it's going to be through existing portfolio companies or people they've worked with. I think that's probably the path of least resistance in trying to get access to VCs or strategic investors. Find out people that know them through LinkedIn, through various other sources. So really try to make use of your network as much as possible. Attend conferences. Try, if you can, to not take no for an answer in a very polite way, obviously. And often I know some studios realize what a challenge it is to raise money, and so they will actually hire a commercial director specifically designed for that task. So something to also consider. Again, this goes back probably to that commercial director as well, is financial competence. There's a lot of great studios out there that I've met and I've come close to even investing personally in, but when it came down to documentation or getting into due diligence, I found it very frustrating because they simply just didn't really have their financial and legal contractual documentation in place, and that really makes investors nervous. So I can't emphasize that enough. It's one thing to initially have a great game, start populating, meeting people, creating buzz, soliciting interest, but I think you need to then employ or invest as much time ensuring that your contractual documentation is in place to ensure that you can kind of get a deal over the finish line. That'll really, really help your process when you're talking to investors to be on top of your numbers. They'll really find that a breath of fresh air. Also, don't really get stuck on valuation. I think it's a lot more important to focus on the uses of funds, how much money you're going to raise, and where you're going to deploy it in terms of additional hires, in terms of CapEx, in terms of back-end infrastructure, in terms of UA, in terms of BI. I think that the more that you can really hone in and pinpoint on what those uses of funds are going to be, how you're going to deploy it, and what kind of a return you're going to make on it in terms of the projections of your revenue, I think that's going to be a lot more appropriate, and that'll hopefully align with your investor what could be a suitable valuation. And that's it. So.